Hello, this is John Piper with the weekend video clip, and it's Saturday the 21st of July. I want to start with Bitcoin this morning just briefly and with a longer section later. Two interesting points here, I think. Firstly, you'll notice that the low here, I'm going to add arrows later actually, low here came in mid-November with the low coming in at 5,511 on that date. We then saw in a period of about 4 weeks this incredible rally up from 5,000 up to 20,000. So the thing went up 300% in those few weeks. Now, what we've seen in the last 6 months, in fact more than 6 months now, has been an almost complete retracement of that few weeks action. I think this is probably quite significant. So the whole thing has just been washed away, almost like it never happened at all, really. The actual low, as I said, was at 5,511. It's possible we want to go a little bit lower on there. Now, my second point is that, in my view, we're very close to a low here, and we have an asymmetrical trade. I said in my report on Thursday morning that I thought there was a 60% chance the low is already in. I'm looking at this in a bit more detail later on in this video. Later that day, Palm Beach Confidential, branch of Agora, announced also the low was in. I'm not sure whether they listened to my video or not. Probably not, I suspect. Now, that alone actually is, because of the number of people who subscribe to Agora, they're extremely successful marketing people, and how much they may dislike some of their material. So that there is a weight of money argument here. Back in April 2017, I bought quite a few coins purely because I could see all this marketing material going out with Agora. It's quite a small space, the cryptocurrency space, and it seemed pretty certain to me that all that money flowing into the space would push price up as it did. And I think the same thing will happen now. There's a possibility that it may go lower, as I said, but even if we do, I think the chances are that the downside potential maximum is 50% from current level, in my view, whereas the upside potential is 10 plus or 10 times or more, or 10x, as we say. Now that gives you an asymmetrical return. You put in, say, 5,000, you might lose 2.5, you might make 50,000 out of that. Now, to me, that's a good trading situation, and I think it's the best going at the moment. I don't believe there's a better situation available right now other than the cryptocurrency market. So that's the message I really wanted to make. There's also a study by JP Morgan indicating that the ratio between cash into a market and the market cap is 50 to 1. i.e., if £1 billion goes into a market, then that market will become worth £50 billion. This makes entire sense. You think the first guy buys at, say, 1, next guy buys at 2, 3, 4, 5, 6, all the way up to 50, for example, then the money going into the market will be 50% of the actual market cap. I believe my maths is correct there. However, actually, maybe it's less than that. But the point is that markets don't work that way. Markets work on a much more volatile basis. And I think 50 to 1 is probably the right, and I'm sure they've done their arithmetic. So a little bit of money going into a market can have a much more dramatic effect on how that market behaves. Anyway, so I'll be doing a longer piece later, and now on to FTSE. Right, before I go on to FTSE, just a quick word about bull and bear markets. Bull markets create wealth, purely because of that multiplier we were just talking about. Bear markets destroy wealth. It's fairly obvious, really. But, so as a share or a market builds up and grows, including the crypto market, then that is very good for the economy because it's creating all this wealth, people are richer, etc., etc. Clearly a bear market has the opposite effect, as we're seeing rather dramatically in the 1930s, I guess. Right, FTSE, no change here. We've got a very corrective A, B, C, which I think is an A wave. Then there's sideways drift, which is a B wave, in my view. Not necessarily over yet. You can't really tell with these things. There's 3 sort of spiky spikes as such, but there's no definite low. But I think we'll see another sell-off, as in an A, B, and then a C. But it's all a bit unsatisfactory right now. Right, on to the DAX. Right, we've got 2 possible counts here. One is that we're seeing a triangle, which would be an A, a B, C, a D in progress perhaps, and then the E perhaps down to there. That's one count. The other count on this longer term chart is seen a 1, 2, a 1, 2, a 1 of 3, a 2 of 3, and we're about to collapse, having seen expiry on Friday. Let's have a look at the shorter term action from this peak here. Although this, I've been asked to put lettering on charts. Getting a bit messy. I've deleted it from FTSE for that reason. I mean, I can see it's quite useful, but it does clutter up the chart. I'm not sure it's actually that good a thing in a way, because if an individual starts lettering charts, it sort of becomes rather permanent. And I think it's important to know that things do change, and it's perhaps not a good idea to actually put things down in black and white in case it is wrong and you get too attached to that particular count. You need to be fairly flexible, I think, in these things. Okay, so possible C wave here. So A, B, and then a C. This looks like the kind of thing you see in third of a thirds. So it could be something is starting up, but quite a strong rally to close. That overlaps with that. So it really depends on what happens next week. There's no, I mean, certainly there is a very negative pattern. There could be a very big fall. So I think it's important to be aware of that next week. But there's not a huge amount to go on this chart right now. Right, gold. I mean, we had a reasonable sort of buying spike, I suppose, off this level here. It looks like an A, B, C at the moment, so we still need more to convince that something actually of interest is happening at this point. Wall Street remains pretty confused. We've got the peak, obviously, back in January. You've got the triangle or A wave down to there, then a B, then the A for possibly a C wave decline, which is a 1, 2, or an AB up to there. But looking at the shorter term, which we'll do now, there really is not too much for me to talk about. I mean, that's fairly impulsive, that's sideways, we've got the big drop here. But that rally begins rather formless, takes that out. So we've also got these 3 spikes down here. So not much to go on there either, really. Having said that, if you count a very small 1, 2 here, and a 3 to there, then you've got this 4th wave triangle, and a 5th wave decline. Not exactly the neatest count in the world, but then often these things aren't. You've then got an A, a B, and a C. It's quite neat. Look at the fibs on that. Okay, well the actual retracement here came up to between 61.8% and 78.6%. Again, we haven't got much to go on here, but if this starts to accelerate down, then that could change things quite dramatically. So there is that possibility on that one. All right, final look at Bitcoin. On the chart, we have the 5 waves up here. We've discussed that already. So the 1, 2, 3, 4, and 5. Then got this decline. It looks like a B wave. So it's either an A, a B, and a C. But already the C, that is a C. It's certainly gone beyond the length of the A wave. It looks more like a 3rd wave to me. So this could be a 1, 2, and a 3. Now the key thing is any decline here doesn't come back below the peak of 1, this level here, and keeps on going basically. So if we sell off from here and take out the level here, that would be a negative. If instead we go higher, we'll see a very corrective form of 4th wave and a 5th wave peak. That would be quite encouraging. The low is in. We've got the weighted money argument. There's a Agora promotion going ahead now. We've got a lot of expectation, I think, that the market is about to turn. We've got the ETF decision on the 10th of August, which could be fundamentally positive, bullish for the markets, if this market anyway, if that is approved. I think also very bullish if the SEC says something like, well, yes, we like the idea, but it's not quite right yet. Go back and improve it, and we'll look at it again. So something that's some encouragement from the SEC decision, even negative, would be a good thing. Obviously, an outright refusal would not be a good thing. But again, I think the downside is quite limited now. Could go a bit lower. That's certainly very possible. But I don't think very much lower, which is why I think this asymmetrical trade makes sense. Feel free to email me if you'd like any more information or discuss any aspect. And we do 2 other reports per week for those who are interested in subscribing. Otherwise, I hope you found today's report interesting and useful. Back to 4 on Tuesday for subscribers. Have a great weekend. Thanks for listening, and bye for now.